Let's see. Let's see. Gonna get some. I was trying to find my list of things. Welcome. How's everybody doing? A good Labor Day weekend? I hope. Yeah, I'm just. I figured I'd try to get a little bit of an early start on the week, mostly because it was a long weekend and sometimes there's I don't know. I get kind of out of it, I guess. So I just wanted to kind of get back in. I was thinking about it a little bit yesterday, but mostly today as we had the market day was off, which is fine. It's a short week, and short weeks can be a mixed bag. I mean, you can say that about any week, I guess, but historically our short weeks have been, I guess would they be mostly like not as good if I had to pick one or the other? Because typically, if it's short on a Friday, especially, but being short on a Monday is a little different because you kind of lose that end of the week lull. Because like usually Thursday, Friday, your kind of volume is dropped off quite a bit. So when we have a short week on a Friday, it feels like that kind of bumps up to Thursday and kind of infects the rest of the week with boringness. And then sometimes I guess I've seen the opposite, right? Where if you have a short week and it's Monday's lopped off, it could be a little bit more exciting for a little bit longer. But I feel like on the whole, like our short weeks have been pretty boring. So um, yeah, that's my opinion about it. I don't feel like they're very exciting personally. 1802. So I've got GameStop open right now because I was looking at trying to find like kind of the best chart that I have that I feel like is the simplest. There's a lot of charts that I've got for GameStop. GameStop's becoming relevant for more than one reason. It's not just because of it being GameStop. It actually has a really strong potential right where it's at. So there were there was a comment in the Discord about how like, well, if you're just wrong, right? Like it's not going to happen, and you can't really. There's nothing you can say to that. You can't really reply to that. There's no reason to reply to that. So in some ways, because like that's not even an argument. You're just telling somebody that they're wrong. Okay. Well, yeah, of course, that's a possibility. And it'd be a lot easier to say anything else would happen here except for this. But it also would be intellectually dishonest for someone to look at this and say that something big could not happen here within the next week or two. I don't see how anybody in their right mind could look at this and think that that's possible. So that's where I'm at with it. And I honestly think it might be a great swing setup for the trading challenge that I've been doing as well. And it really hasn't been. I mean, GameStop and AMC have not really been great lately. I mean, the last couple of weeks specifically, going back into really, I mean, for a while now, and you can see, gosh, GameStop's been essentially range bound since June. I mean, talk about a long build out, a boring summer, right? Like this is this was a long time ago now, and aside from some really, really, really big action right at the beginning of June, it was essentially just flat. So it's been stuck between 24 and 21. I mean, And that part of that is the reason why I think it's such a good time to pay attention to it, because it hasn't just been range bound, it's also been sideways into like this really quite pivotal moment. Um, Now, it doesn't have to be bullish. You could definitely make arguments that it's not going to be bullish in the end. Um, but there's no doubt about it in my mind. Like, this is at a kind of a make or break point. At farthest, maybe you could get to like the 22nd of September, like maybe somewhere around there, like the third week of September. But then you're just kind of done. I mean, and you can see in the past, there's been 3 times we've hit this trend. So I'm a bit like confused. The comment that was made was there's no way we're going to run within the next 2 weeks. And I'm like, well, when the heck is it going to happen? Because you don't have this kind of action anywhere else. Like, it's always along this trend right now, and at least for now, we're pinching into a corner. Like, there's nowhere else for it to happen. So if you're expecting like big moves, the last time you would have maybe expected one would have been back here when it was like pinching into a corner, right? It's like compressing into this area. It's not complicated. And then you have, of course, all the other stuff we talked about, which there's a ton of it. And I'm not going to go into all of those details tonight. That'd be pointless. But just in general, like, it just felt like a really strange comment. And it was from somebody that normally is bearish in a lot of ways, but is like normally a little bit more respectful. And it was just very like, hey, you're wrong. This is not going to happen. No, this is not going to happen. There wasn't any TA involved. It was just, nah, that's not going to happen, right? And for me, I'm like, look, man, I'm all about dissenting opinions. I really am. And I'm all happy for it. That someone would come out and say, like, I don't think this is the way it's going to go down. That's great. Because that means that you get a different perspective, and I may not be right. So you need to have other people, to talk about it. But for someone just to kind of blanketly come out and say no, and then looking at the chart, I'm like, even a naysayer, even somebody that has no interest normally in something like GameStop, should be paying attention to this right now. Like, look at it. Like, I don't know what to tell you. There's a possibility, that it drops to like 18. But even that is like, when's the last time this trend broke like that? Was in 2020? I mean, shouldn't that signal some kind of an action of some kind? If bulls don't step in there, like, where the heck are they going to step in? That's the question. It's just going to go sideways. Well, it's not impossible. I mean, I guess it's not impossible. It could go sideways till February 2026. It's not impossible. But I don't find that to be as likely as some kind of a big reaction. What we've got is sort of similar to either one of these bottoms that you can see, either one of these interactions. So this is a really big deal because we're going into an earnings week on GameStop. And then we've got FOMC right after it. And again, I'm like, and you're pinching into a corner. It's like, when else are you going to run? This is strange to me to think that people are so like, they're so like disenfranchised with these two tickers that any kind of a claim that it is going to move is met with just extreme disdain, like disbelief. And I get it. Like, I get why, but this is also kind of, again, I think it's, like I said, intellectually dishonest to look at something like this and suggest that this shouldn't have a reaction or this won't likely have a reaction. So, in the worst case scenario, maybe we're in something like this where it's got chop and it's going to have a pump and then a dump. But even that elicited like a big reaction. Okay. This is certainly a scenario I'm aware of, and I'm not going to say that this is impossible. It certainly is possible. It's not impossible. You need to know that. It wouldn't result in some kind of a massive move. This is 150%, so I mean, it's still a big move channel-wise, but it wouldn't result in like this massive squeeze. And then alternatively, it's like, well, there was another walk down after it jumped the creek here, and then it walked down again. And that time when it broke out, it's extremely subtle. And I want to mention this because during distribution, the stocks tend to be a lot more heavy volume and volatile. And when it gets to an accumulation period, and again, like this kind of reminds us of what's going on almost right now on AMC, it gets really boring and it's extremely droll. Like this is not exactly like highfalutin price action. This went on for months. This is May all the way through August. Sounds familiar, right? And then this broke out in August 25th. Weirdly enough, that's kind of the date that I was looking at, was like the 25th. But accumulation usually ends with a kind of a whimper, as the saying goes, because it tends to be that all eyes are not on the stock when it runs. It tends to be that most people retail have given up on it. So there's this very, very, very subtle, there's this very, very, very subtle creek cross that happens at the end. And the same thing goes for AMC, although it happened later, as you guys are aware, if you follow any of those meme stocks, that AMC took a little bit of a time, but this is the moment right here. That's it. This is all it was. This is the moment where smart money buys in. So, you look back at this and you think about how, like, we're all kinds of, we want to be right all the time. We want to obviously get the best entry, and we're all kinds of, sleuths about how to determine what that's going to be. But this is it right here. Like, this is the moment. You can see the volume pick up. It doesn't even seem like that big of a deal. There's a big backup too. It's almost like a full throwback here, back to what is now $1, which is interesting, right? Now that value is where it is. So these things, I'm like, that's it, man. Like, it's these few little moments right here. These were the creek crosses that led to the big moves. That's it. And the whole thing, and this is what boggles my mind, is that, how many times have we had to go back and look at this? Like, this is not a long time period. This is a 16-day time period. That's it. Maybe 17. So it kind of boggles my mind that people still say, like, it can't do something in like a couple weeks' time. And I'm like, where the heck have you been? Like, this is not hard for the stock. And even if you look at this, again, like from a really like droll kind of, I don't think it's going to squeeze, but maybe it'll have this markup. It's like, this did not take a long time. And honestly, the trading days, it's like nothing. It's like a blip on the radar if you look at that time period. So could this move in like a 2-week time period to a cross? Yeah. We're at September 1st. 2 weeks from now, it's going to be FOMC. So you don't have to have like some big, dumb imagination at this point to think that this is totally reasonable, if not likely, given the fact that last time it was the same deal. Last time you basically had like a repeat of that same concept right here, and you just had this kind of genteel cross. There's no volume down bottom, guys. The volume is basically like, nothing's happening. It's just going down and feels like crap. Yeah. And then all of a sudden, within about this is a 1, 2, 3, 4, 5, 6, 7 day window, all of a sudden it's taken off. And then 3 days later, it's 300% up. I mean, this is not a long time. This goes from basically like no volume in a vacuum. You can see the earnings report in March caused the stock to drop down low, which again, that's kind of what we're saying. Like, that's a possibility. I don't think it looks like this. It doesn't look like this widening, right? You saw that back here too. There was this big widening that happened right before it dropped. You don't really see that right now. It looks a lot more boring. It's been very sideways. Looks like nothing is going to happen. It looks like maybe like this small little guy down here, doesn't it? That 3 or 4 or 5 day period that happened in April down here along that trend. It was just sideways, low volume. It really looks like that to me. So I'm like, I look at this and I'm like, all right, well, what's the worst case scenario here? it's not that unpredictable. It seems pretty straightforward. I guess worst case scenario is you get an upthrust and then drop, but I'm not seeing where that volume comes from. There'd have to be something. So maybe that happens on earnings. Like there'd have to be some kind of an early catalyst, or there's some kind of an early release of data and then they're going to do the call later or something. I don't know. Maybe on the, who knows, right? We don't know. So this could be on the 9th, right? Or it could be a few days before. They have done that in the past. They've announced the data before the actual earnings call. That's happened before. Sometimes they announce something else that causes the stock to move either way. But like worst case scenario here is some kind of like an upthrust at some point and then it drops back down. How long do I think that'll take? I don't think it'll take more than a few days. You know, when it moved down this first leg, it didn't take an infinite amount of time. It wasn't several weeks. It was within like, because it was 15 days. Then you guys are like, it's several weeks. That was 2 weeks. But to me, I'm like, yeah, it just depends on how you count that because there's a lot of pretty significant drops here. You know, the chopping days is like minimal. You got like 5 or 6 days in the middle. Trading days, that is, not days. Anyway, some like worst case scenario here, it drops down for like 5 or 6 days. That's just going to put you in light of the 17th. If you look at the space between the 9th and the 17th, it's like that's the space. You know, if you really need to make that drop, totally could do it right there. You could have a pump into earnings here and then dump back down. And then what? What's going to happen? Is it going to keep dropping? Is it just going to go sideways again? Look, I can't tell you that every time this happens, history is going to repeat itself. What I can say is that it seems like there's a pretty good chance that it's going to have a pretty strong reaction. Given the fact that this is also a retracement, you know, back to this original backup here. We've talked about the wave. I mean, there's just so much stuff. It's almost embarrassing. So I'm like, the idea of this being like sideways and chopping, is it possible? Yeah. It'd be dumb to say it's not possible. You know, oh, it could just do this though, Booksy, and just sit down here. And then we'd have to wait until January and it breaks out. Maybe that happens. I don't really know why that would happen because we've already traded this area. The only place that I could think possibly that we might want to trade is like this zone right here. And if we do that for like a day or two or up to 5 days even, it wouldn't be a big deal. But like that's it. That's the only place I can possibly think because it doesn't have a lot of trading volume. And I'm not going to even pull up VRVP. So do I think that GameStop over the next couple of weeks warrants attention? Yeah. And we talked about IWM a bit, and I do want to look at that because I think that's really important. But IWM is doing this thing where it's like repeating what we saw after COVID. And I've been trying to get this across in different ways, but basically it's like a smaller version of that COVID V-shaped recovery. In that I don't think that if you look at the projections from it, none of those projections seem to suggest that you would go like to the moon, right? That the small caps would just be flying. That doesn't seem very realistic. It also has this strange middle function right now, which really bothers me, which is that anytime you get into like the middle of what we call like an S curve, there's an M that takes place. And the M is... It's always one or the other, right? And all it is you can call it a consolidation, if you will, right? So it forms a range, and then you get a consolidation. And almost without fail, it does appear to look like those cat ears. And the reason for that is quite simple, because a reaccumulation looks a lot like a distribution. If you go and look up reaccumulation schematics, I'm not going to do it right now, but look up reaccumulation schematics and look up distribution schematics. And you'll find that some of them are so ridiculously close that it'd be really easy to mistake one for the other. And that's part of the reason why I don't really worry about it too much. Instead, I look at that end result, right? Like, where does the cross up happen? Does it have a spring and then cross back up? That's the buy-in, right? And then you go. Or does it go up first and then drop down, right? Does this punch too high and then drop down, in which case you're probably going to see this hook and then nosedive. And that's where I leave it. And this is the thing that people always say, well, so it could go up or so it could go down. It's because of my inability to easily distinguish between a reaccumulation and a distribution, because they're very, very similar. And then you get those measurements and you can almost without doubt, almost always, like if there's a bottom here, and then there's usually like a top marker as well that you can use. And almost without fail, there's basically like a split between the two in terms of directional movement. So you'd have like an equal part. Maybe this is like a 618 or 786 recovery. And then this is just another extension that looks more like a 50-50 S-curve, right? So this is what we see on IWM. And I have a feeling that just like in COVID, there has to be maybe some certain things that happen on a worldwide scale and a political scale, if you will, that kind of allow the market to kind of have some breathing room and continue. We're not looking at it right this second, but it's there. And I do want to look maybe at it briefly. But it's got the same exact setup. What's weird about it is that if you go and look at it, small caps run up really early. They're actually at their all-time high area, like that range. They don't hit all-time highs till the very, very end. But they're in this all-time high range until the very last upthrust, about a year before, an entire year before, which is kind of bonkers. Like, it blows my mind. So almost the entire year before the S&P 500. And I think people, when we think about, and I've done this before, but when we think about the, what are you doing looking at futures, Booksy? I was just looking at stuff. Shouldn't dabble in things you don't understand. Dabbling in the dark arts. Booksy, futures, what are you? Some kind of day trader? Yeah. Stay in your lane, buddy. Stay in your lane. Whatever people say. So anyway, this area right here, right? I think this is that same M cross that's happening. You can see the pivot down here on the RSI. It's extreme backup on RSI. And what I was mentioning is that this is IWM now we're looking at. This was this was here like an entire year early. This is February 2021. And then this right over here is January 2022. So 11 months, maybe even some change, and you have this complete reversal. If you don't know, the S&P 500 didn't hit that peak, and it was more gradual. There's not like a really strong, like there is a top range, but it's like during this whole time period that IWM is going sideways, the S&P 500 is kind of crawling up more like an arc. It looks more like this. I'll show you. If you were to put the charts side by side, it's more like this, right? So there's this steadier climb on the S&P 500, and meanwhile, IWM had already like kind of hit its peak and was just kind of chilling out, and it has like one final move at the end. This is curious to me because the initial move that happens here was November of 2020. Why is that curious? Because in previous examples that I had tried to use, I talked about this idea of like disbursement, where your bigger companies are like basically starting to move back to small caps. We already know this is happening to some degree because if you look at the buyback in the tech stocks after the sell-off, this V-shaped recovery is basically like smart money buying back into positions. And we already know this is happening because stuff like that were latecomers like Apple and Tesla, which are still lower than they were at the beginning of the year. They haven't made new highs. They've seen massive inflows, but they saw them after the fact. So as a reaction to those tariffs, they've seen them later than the other kind of major tech stocks, if you will. And they're essentially like all back in their positions again. So you get this buy back in, right? This massive sell down, buy back in, so on and so forth, repositioning. The reason I'm bringing this up is because if you remember, and it's not a really complex idea here, but September right here, this is like the halfway point, all right? As you can see, this is like the halfway point for this run up that was after COVID. I'm not going to say anything about the time of the year. I understand that September and October tend to be pretty crappy times compared to other times, and most people, it's almost like a self-fulfilling prophecy. You kind of do it to yourself, right? Even if there is a rate cut, who's to say that the market runs if nobody wants to buy, if there's no liquidity? Yeah, that's a real legitimate concern. But what's curious about that is if you look at the S&P 500 at the same time right here in September, I think this is really important because, and I'm not a huge, I mean, I like to analyze charts. I'm not a huge, let me do this. Why can't the S&P 500 just come up? Why is it doing it like, okay, well, I guess I could have just looked up SPY. You guys are like, why aren't you just looking up SPY if you want S&P 500? I don't know. Now it's got to load. What's curious about the S&P 500 is that if you look back at where that is, there's a similar sideways period here for sure. It's almost the exact same, right? But again, what happened with the small caps is they basically just like immediately move up to their top. So I had done this little analysis a little while ago, and it's based on this original kind of S curve, which if you had done this on the S&P 500, it wouldn't have worked, right? And you'd have been mad. You've been like, well, that didn't work. But it's there, and technically, like at a later time, it does actually get there. So that target time-wise was really bad. You wouldn't have got it right, if you were using this on the S&P 500. But what's curious is that, again, if you look at that S curve here, small caps actually did get there. They actually got there in like that time period. So, excuse me, I'm going to get some water. I think it's a really interesting chart comparison. Because the question is, like, why did that happen when it happened? Like, it doesn't really make a lot of sense for small caps, which are typically like weaker, right, by comparison. Well, it has to do probably with some economic factors that are going on. But also, in my opinion, a lot of it has to do with disbursement, with like rolling these positions. Because right here, right here you have profit takers, right? So like we've now come above the previous all-time high. So as soon as it came above the previous all-time high, people start taking profit, and they're really just using it as an excuse also to kind of reload at lower levels, just slightly. We're going to make sure we can test this floor. So during this time period, that there's a lot of selling. You're obviously not selling off every position that you have. That's not true. But you're definitely selling some. And clearly, like, we wouldn't just be selling this because bears think that it's going to go back down to the bottom or something. It's just people taking profit. It makes sense. It's just common sense. So you have these larger institutions taking profits, and then where are they putting that extra liquidity? Well, I think it's kind of obvious, right? If the market's led by the larger companies and the smaller companies benefit more from certain things, right, as opposed to, these big tech stocks, which really don't benefit. I mean, they kind of are hurt by the tariffs in some cases, but they're not really going to benefit a lot from like a huge rate cut. They don't have a huge amount of debt. So it's not going to really affect them in that way. It's not seen as an effective measure in that way. So I look at that and I'm like, all right, now this doesn't have to be indicative of exactly what happens now. That's not true. But when I did the measure to sort of figure out like where was this going to be at the top, I actually did it based on what was set up here, not based on that comparison. And I still found that there was a decent chance this was going to peak in about February to March, pretty high up, like in the 700s. That's possible. Doesn't have to happen. I get it. Nothing in technical analysis has to happen. But the way this built out looks pretty darn convincing, right? And then you see here that, like, again, we breached that all-time high area, and immediately we start seeing this kind of widen out, right? this makes sense to me for a number of reasons, because previously it did the same thing SPY did back here. We start seeing again that widening out. And anytime you see that, I'm thinking about it in terms of like that S-curve. I'm like, oh, so it should just S-curve up. Now in this case, it actually looks like it did it quite nicely. I wouldn't say it was perfect. It didn't actually get there, right? It didn't even get there. I would say that if I were doing it at the time, I probably would have looked at it and said, oh, it should come to 645. Well, it did way later, like now. I wouldn't have necessarily use that as an excuse, right? But I could say like, all right, still, like in theory, if you just look at it, it does have that same motion, because it's not exactly, again, rocket science to see this as like the first big buy-in and then the last big buy-in here. Like that's pretty straightforward. And then this is a distributive top. So like this is all upward momentum here. There's a bottom, and then this is a topping motion. So I'm looking at this like in a similar light. It doesn't have to be one-to-one by any means. But again, here it is. You have like a new high, and then you're getting that widening right off the top. And by the way, you may think that I drew this after the fact, but I did not. I drew this before the fact, before this started doing this. It was right around here in like around July. This is almost exactly what happened. I didn't know that it was going to be perfect, and I still don't know if it's going to come down again. I don't really care at this point. It may not. I think for that, just use basic TA. Like look at it, see if it's overbought, et cetera, et cetera, et cetera. Is it building momentum as it goes up? But I do think that there's a good chance that this leg hasn't happened yet. And like, if it's going to happen, where would it happen? Probably within the next couple of months, maybe going into November, right? And this is the same thing that we saw at latest, right? Maybe going into November. The same thing we saw in 2020 to 2021. So what does that mean? Well, I'm not 1,000% sure. I think you can look at that and just kind of think about things in terms of liquidity. Like, all right, well, where's the money? Is there money being made available? I do think it's really interesting because this has not even come back to all-time highs yet. IWM is just Russell 2000. And I'm looking at it like, all right, is this even a buy? Like, would this be something I would want to buy right now? Do I think it's going to make new all-time highs? Well, the simple answer is yeah, I do. I mean, I looked at this every which way and kind of was like determining whether or not it makes sense to buy it. And I'm like, look, any way you slice this was a backup on the creek. It came really low, which stinks in some ways. It also could potentially be a bit of a weakness, but I don't want to get into that just yet because I don't think it's done necessarily with the upside. Once it's done with upside, then you can talk about what maybe happened back here that could have been considered weak. But on the same kind of page as that, you have to just kind of look at it and be like, all right, well, it's in this big trend. This is a macro trend from way back, 2008 financial crisis kind of thing. It's made the same move in some ways and dipping below that trend as it did in COVID. It's sitting right up underneath here. It's going into that same season of the year, September, October. It's sitting right up underneath, right, this line. But the difference is, and this is the important thing that I think we need to make mention of, the most important thing perhaps is that if you were to look at where this jumped the creek relative to itself, which is this pink line, this like Pepto-Bismol line I got, that's roughly around where the middle is, because this is where the volatility kicks up. You can see the volume had like dropped off, and then all of a sudden the volatility like really kicks up before it takes off. That's where it's jumping that downward resistance, right? And it had confirmed that downward resistance when it came up. So this isn't just two lines from like way back before the drop. There's a confirmation of that resistance right here from August to September in 2020 where it's just like chopping along that resistance, and then it breaks it, and then it goes. And that's where you get this huge rally. And that's where the 50% completes. Well, using that same idea of like that's where the creek is, I kind of went back and just looked at this one. I was like, I don't know, man. I mean, you can't be 1,000% sure because these markers are a little different. It is possible that maybe it already even happened like way down here, and then the volume doesn't have some kind of steep drop off Although I would say, yeah, it definitely has some hikes and volatility here in the middle. You can see like the swings got a lot bigger, and then the rate cut was announced, or at least supposed, right, at Jackson Hole. It was inferred that, yeah, we may be cutting rates sooner than later. And now you have a pretty significant move. So again, can I say with absolute certainty that that's where it should be? I don't know. Like maybe, maybe not. I don't really care that much because there's like 3 or 4 different areas, but they're all in the same zone, which is like right here from like 212 up to like 226, this region right here. So even just estimating it based on that, I looked back and I was like, well, it kind of makes sense because if this is just a wave and it's going to break here in the middle, which is not even that significant of a spot, it's probably going to resume the trend that we were in prior to that, which goes from December all the way of 2023, to February 2025. It's a pretty long trend. That's a trend up right here. It probably is going to try to break back into that trend. In addition, it's going to probably break back into this trend that goes back to 2008, which is way up here. So if like you look at the spread here, the next place it would go would be like 265. That's a new all-time high. It is. So, it'd have some trepidation maybe at the top here. And that did happen to a lesser degree here, I think, because it was below it. But notice that again, like this actually, I find this to be really fascinating, I guess, that this didn't actually have like a topping action right here. Like the S&P 500, we just talked about it. It went up and then it kind of chopped along the top. But the small caps did not. They chopped below the creek. And then once they jumped, they just ran. There wasn't a backup until like way later. And then, of course, it backed up in extreme fashion for like a year plus, which was a long time. But I'm looking at that and I'm like, yeah, it's pretty dang similar to what we see here. There's a lot of chop up underneath this ledge here at 230, which hasn't been cracked yet. And that was the one we pushed, right, going into elections last year. So I'm like, look, it's not that complex to look at this and suggest that like, yeah, Booksy, I could definitely see this going sideways. If it rejects here, we could still have that kind of sideways action going out into October, but then it has to make a decision. It's not going to do that forever, not likely, right? And the longer it does it, maybe the more likely it is that it's not a great thing in this case, because we don't know what the future holds. That would be a bit of uncertainty, right? If the market's just really not sure it wants to go. But with rate cuts on the horizon, it's kind of like, why not? We could probably see a rally into the end of September and just break right through it. So I'm just using like the most rudimentary stuff right here, but I'm suggesting that these are hot zones. What I would look at them as is not necessarily definitely going to get there, but there's certainly a lot of correlation to these zones right up here. One of them is February 2026. Curiously, though, if you use the same model as 2020, again, that this idea that this extends up and does this 50-50, you don't actually get back to this top. Why don't we go to like 380 if it's going to do the same thing? In order for that to happen, it has to do what you see here, but on like a bigger scale. So this would have to be like a halfway mark, and you need to see like another consolidation in the middle. So it's not impossible, but I think it would be more likely that would be like 2026, mid-year or something, if it's going to be really bullish, right? To make that full leg up again, in order to see that, I think you'd have to have another middle up underneath the midline, which is what happened here. So I'm looking at it like to me, it doesn't look like this move leads you to 375. That just doesn't seem realistic. It does, however, seem pretty realistic that this move could lead you to just a new high at 270 or so, maybe around that area. All right, so why bring it up now when you're talking about GameStop a minute ago? Because if we're wrong, if I'm wrong about GameStop moving now, it'd be confusing because you'd also be like, well, where the heck is GameStop going to go? We just looked at that chart. It doesn't really have anywhere to go. And at that point, you'd be like, so what, it's just going to chop low then if this takes forever? Well, maybe. That's what we would have to assume, right? But I do want to point out one thing before we move on from this, and we can look at some other stuff. I don't know if it's people asking about different things. This is November 2020, and then this is September 2020. So from September in this particular time frame through November, you get that cross up. If you go back and you look at when does GameStop run? When Roaring Kitty says it runs. Yeah. You're probably not wrong to some degree about that. But notice where these major moves are actually happening. So like this is your 2020 March drop. GameStop's a little weird because it actually was already way down low. It doesn't have that big of that significant of a drop. You would just say that's a spring. And then this is just an LPS before it goes into the SOS over here. So the bottoming period here is very different for GameStop than it is for, let's say, AMC, which dropped into these lows and spent the rest of the time in a range. This was actually already leaving almost immediately after the COVID drop. But looking forward, we were just talking about this, and I was saying, look, when does the big run happen, right? So this is September 11th through November 3rd. Okay, this is when that cross up is happening. And then there's a big run up from really November 3rd all the way up to March 2021. So you find the same dates here and just take a look. So September, we'll go back as close as we can, roughly around that time, maybe the 14th. And then going out to November, which is right here. And we were pretty early in November. That's what we were saying was like really early, first week of November. And then all the way to March. Wait a minute. So you're saying that GameStop rallied with the small cap stocks at the same exact... Yeah, I am. Like, it's almost too easy that it doesn't satisfy the whole, like... It just doesn't satisfy this whole concept that, like, well, yeah, but there's this short squeeze, right? And I'm like, yeah, that was happening. Don't get me wrong. The reason GameStop ran as far as it did is because of the short squeeze. I have no doubt about that. But from a technical standpoint, like, this is an SOS going into September. So you tell me if that makes sense then when you look at this right here and you see that backup right there on the first week, that big break here on the first week of September, followed by that backup. That's an SOS in a September time period. Now, this is way stronger than you would expect for maybe September, October. It's still moving pretty darn far. I mean, we're talking about, this looks like $1.50 up to $3.90, but of course at the time it was different values. That's still a huge percentage change. So you're basically saying from like the end of August up until essentially October, you moved 230% on GameStop. Then look at where November is here. Does that look familiar? Well, yeah, I think so. Because if that's the SOS, right, and it is, and then this is the creek jump, and it is, then essentially, like, this is the exact same in some ways as what we saw on, and then it runs up into March. This is the exact same thing we saw on IWM. I mean, you can look at this and like kind of nitpick and say like, well, it's not really the same because blah, 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 you know. But I'm like, dude, just look at it. It's the same friggin' thing. Like, this is where the main markup happens and it starts really going. There's no doubt in my mind that that's correlation. You could make some other kind of argument and say, well, correlation is not causation, Booksy. No, but when we look at again, where are we at the S&P 500 before this time period or during this time period and just before it? The S&P 500 is chopping, and you're getting profit takers, right? And then that money is being pushed into the rest of the market. It's pretty clear. This had yet to go to all-time highs during this time. It was sitting below it, hadn't even broken its creek yet. S&P 500, man, it's already up here doing this kind of nonsense. So do they take all the money and just put everything 100%? No, of course not. That's silly. The S&P 500 keeps going, but it's notable that that early buy-in and the fact that this got there so fast. I feel like that's probably because, again, you've got repositioning, like people buying back into these kind of more risky stocks, right? More risky plays. So the risk adverse plays are not being bought into early on. You don't have the all-time high, but the S&P 500 goes, but as soon as it makes an all-time high, now you get a big push, pretty straightforward. And I think that that is a big deal. I made a point about it in a previous stream. I see this right now. I can't help but see the same thing. The S&P 500 is already at an all-time high. It's chopping a little bit more than it was before it came to the all-time high. Maybe it goes a little higher. Maybe it goes a little lower at this point in terms of chop. It might have more, more volatility. But certainly you could definitely suggest that that disbursement is happening and that it's probably happening right here. So the expectation that I have is that even though this could absolutely play out like a one-to-one kind of thing, where it's like, yeah, well, we're just going to sit here until November, right? And then we're going to jump up and over and go. That's a possibility. Don't hear me wrong. It's not, again, it'd be silly to say that couldn't happen. But at the same time, I think it's smaller. I've been looking at it, again, every which way, and I'm like, I don't know, man. If it doesn't ever cross down here into September, and that's where the 17th comes into play, I think it's essentially right here. You see that intersection? That's the 17th. So even if it backed up until then, it's got to make a decision at that point. That's 2 weeks. It's not a long time. And my thought is if this is expectation is that it's going to go into that date, it's probably going to run up into that date. And when expectations are met, then it's a sell the news moment, and you basically have like a new range at the top, right? During the, oh yeah, now we've got rate cuts starting to roll out, probably have a range, kind of a moment. And that's my thought, okay? Beyond that, I think that you could see maybe a final push up or a continuation going into February. And that's very familiar to what we've talked about before in terms of the February, March. But I think it's important to note that the compression that we're talking about really is into the end of September. If this continues to run as it is, this is my big broad thesis kind of coming to a close here. If this continues to run at the rate that it's going, based on where we see this kind of making these splashes, right? I don't think it's unreasonable, and I did this measurement like 6 or 7 different times in different ways. I was trying to figure out, like, is this actually what's going on, or am I just like seeing things? I don't think it's unreasonable to say that's the S-curve. It's pretty obvious in some ways, and it kind of hurts my brain to look at it now. I'm like, I don't know, man. This just looks like that's where it is. Maybe I'm wrong and it's going to widen out and there's going to be a bigger one. So I'm like, this idea that AMC and GME run out of nowhere is absolutely not true. They're not running out of nowhere. They'd be running because money has been away from them. Your operator's been kind of at play, doing what they want to do. I haven't looked at my AMC chart, so I may have to... this is fine. The operator's going to do what they want to do, right? And it's just been sitting here doing nothing for half the summer. That's good. I mean, that's basically like we're just kind of keeping it where we want to keep it. And we already know that the on-balance volume is super high, like in this region. Like it's been pumping up. Yeah, but nothing's happening, man. Yeah, I know. I'm aware of that. But again, when does the liquidity come in, right? When is the liquidity injection going to happen? Well, I'll tell you when it did happen. It definitely happened back here in May 2024. We saw that massive injection. Now, it was a little different because I think we were in a pretty extreme downtrend. But we are still in a downtrend now. It's the same deal, though. We're basically like a stone's throw away. We hit like 320 area. We are gone. We're out of the macro trend that we've been in for 2 years. And I'm talking about the one that happened to begin when we dropped in. So again, I'm not going to kind of belay the same points over, and I promise. Well, I don't even see it on this chart now. This is not the right one. I don't know what those are. Yeah, this one's okay. This is not the right one either. I have to find it. Maybe later I'll do that. I'll definitely find it this week. This is the trend we've been in here, and we're basically at the tail end of it. And you can compress it down to a pretty fine-tuned point where it's these two tops, essentially. And that's exactly where, again, looking back at 2023 August, we were at. That was 2 years ago in September. And we talked about that at length in another session. But again, we're like compressing. The iterations are compressing. They're going sideways. It's really similar to like a big version of what happened back here. But you look back at this, you can look back at May and you could say like, well, was there a similar kind of a thing that happened in May? Because both IWM and, both GameStop and GameStop and AMC were running up. What was happening in that time period? I mean, look, just look at it. I don't really see this as, again, super complex. This is the middle of the S-curve again. So when we look at this, it's like every single way you slice this, AMC and GameStop have run on the tail end of these S-curve moments. And they're not exactly like obvious. There's clear evidence that like some amount of selling was happening here. You can see, but I don't think that on the whole this was like distributive. I mean, it ended up breaking out, having a huge backup. This was a bad one. I didn't like that. That showed some weakness, and we followed through on it later. But this is where we ran up. Well, what the heck does that mean? Like, why there? I can't know for 100% for sure anything in the world. Like, there's just nothing, right? Some things you take on faith, some things you just best information that you can gather. But I can tell you this much: this is essentially like the cross zone, and if it depends on when you use what you use for like your top. I'm using the one that's already there. I had originally used this though, because I remember looking back and having this on the chart and having that marker here around 220s, because I thought it was going to run to 220s, and it did. But it was using like a certain kind of methodology to get that, which was really just this cross down right there, up to that, basically. When you do something like this and you look at it and you see like, all right, well, this is essentially like the middle, almost any way you slice it. Again, this area right here is like the center mark. This is the middle of the entire structure. So shortly after the middle of the entire structure of this S-curve, shortly after that, you have a huge breakout with AMC and GME. It had jumped the creek, there it is. It had jumped the creek and it was already going. IWM was. It was right here. This is just a backup. Now this backup is where AMC and GME got squashed back down, didn't they? And they never go up again. Like, they don't follow this guy up to the top anymore. I guess what I'm trying to say is, like, I don't see that as distinctly different from what we see back here when you have this kind of delayed action, right? Where there's like a middle zone right here, and then shortly after that, you get this really huge influx of volume. That's where the on balance hiked up right around November and December on AMC. That's where the on balance gets the highest. It's right after this. So if it's like a domino effect, maybe you have the S&P 500, if you want to put it this way, S&P 500, you click it over and it hits IWM, and then it clicks over and it hits maybe some of your riskier meme stocks. That might be the easiest way to understand it. I've seen people do kind of crazy stuff with theories of like, well, it's XRP or it's this or that, or it's these FTDs and this and this. Look, that's just not my wheelhouse. I don't want to confirm or deny those things. It's not my wheelhouse. Not my circus, not my monkeys kind of thing, right? I don't know enough about that stuff, and I don't really mess with that stuff. But I can say that the market definitely runs on liquidity. You have a clear and evident kind of, let's call it a domino effect for liquidity in the market that happens repeatedly. It seems to repeat quite often. You have this kind of sense of, yeah, there's definitely like a middle in this zone here. And this is essentially precisely where we see AMC and GME kind of running. You know, I don't know exactly where it is here, if we're in the wrong spot or whatever. It seems like, if anything, we'd be overdue if we think that this is the S curve. Hard to say. We would be overdue in this comparison, left to right here. We would not be overdue in this comparison going back to 2020 because it hasn't actually broken out over that top yet. It's the same idea, though. I think that as you're pumping here, and I don't want to say again, you guys are like, well, they're part of the Russell 2000. That doesn't make any sense, Booksy. I'm not saying that they're taking profits. Don't hear me wrong. I'm not saying they're taking profits from these and then driving it back into the others. I'm saying that they're like late. Like, if there's enough liquidity to kind of go around, as the liquidity is booming, I think then you get this kind of backwards influx to maybe the more risky plays as they break out, right? And they've been kind of delayed longer. It's all asymmetrical. I don't know why you would run everything all at once. It doesn't make any sense. In some cases, there's a running that's happening that's, again, slightly off. I think that makes sense to me. But the other way of like, oh, everything goes all at once. It makes more sense if you think about the fact that there's more money in more people's hands. They're probably willing to put more into plays like AMC and GME that are starting to pop. I'll take a risk on that, right? Make a buck. So I get it. I feel like that's a simple enough explanation. And I also think that while I don't want to draw too many comparisons to either or, there's certainly a parallel to both. I think it's worth noting it. And so I want to note it. And that's what I'm doing right now. So this concept of like, we're in a place where we were just going to go sideways forever. I'm not really buying it. Like, I'm seeing a huge amount of selling right here, and I think that's fitting. Just like GameStop, and I'll kind of stop on this stuff right now, as I wanted to talk about other things, and we will. I don't want to keep going on these two forever tonight, but I just think like it's super ultimate. Like, it just feels really obvious. I don't know, and I don't know why that bothers me. It almost bothers me at this point because we talked about this for like 2 years, and now we're here, and I'm like, yeah, it's kind of working out. I don't really think anything thus far has been a huge red flag. The only thing I can say about this is that, yeah, there's a possibility this has a drop. It's going to drop. I didn't say it's going to, but I did say there's definitely a possibility. And that would be like a spring action. And frankly, I kind of thought it was funny because I was like, again, like someone saying that this couldn't possibly go or it's just not going to happen. I'm like, what are you even looking at? Like I'm not trying to be like an ultra bull here, but there's nothing needs to happen. Like, it's so simple that it almost hurts my brain. It's this chart, the one that's tiny in the middle. This is all you need. You need 6 cents to get this thing started. Like, it's barcoding right here, guys. It's barcoding. You need 6 pennies. That's all you need. If this drops down to 272 or 273, makes a push up to 285, comes back down and lands and retests the top, 278, pushes one more time to 290, back down again to 285. These are just pushing and backing up, pushing and backing up. When it hits the next level up here at 292, you've got gap fills back up pretty far, at least up to like 3. But based on the angles here, it's like, that's all it takes. That's like a 6 cent range. It's like nothing. 6 cent down, 6 cent up. Like, It's super small. That literally breaks this creek right here, which was established on July 21st and August 8th. And then the next gap up level, the wave up, goes up to like 320s. And if you don't remember this, when we broke out, and there's been a huge amount of gaps and all kinds of weird stuff around 3 to 320, because when we broke out in May of 2024, we pushed off of 320. And ultimately, like this zone right here, we're trading it again right now. But ultimately, this zone right here, it just started with that one break. And then all of a sudden, it's like gone. And ultimately, it's I think I put it as like 319 or something like that. It's this marker right here. I put it at like 319, but I guess it looks like it's kind of slightly off on this chart. Anyways, that's it, man. That was like the whole range. And then it broke out and it ran. And this idea that it couldn't run like 200%, I think it's kind of silly. If you look at this as a bottom right here with a push up, this is basically just a phase B at this point. It doesn't actually need to go down that low. It could go only to right there and push up and it could be gone. Now on the big picture, that would look like an LPS, like on the huge range, right? Because it'd look like this bottom never had another low. That's true. But even if it capitulated here and like slid, which we were talking about, maybe from the 8th, right? It's possible that from the 8th, like GME down to, I don't know, the 16th or something, there could be a slide. Where does that place you? I've already done it, and you can see it on the chart right now. There's a very, very, very strong bearish triangulation down at 226, which is that number that I talk about a lot because it's the shift valuation percentage. And it's the equivalent of like the original $1 marker. If you go back to like the 292 era in COVID, that'd be like us dipping down and slapping $1. But in this particular case, if it hits that and then recovers above 245, it's good to go. That's a spring, a macro spring. And I'm like confused by this idea that it couldn't move fast after that because I'm like, why not? You basically have been down here for 2 years. You'd be breaking out of, again, that 2-year downtrend, which is not an opinion, by the way. It's not like, that's like the main resistance that we have right here. And yes, it's basically the exact same as what we saw in 2020, like in terms of the setup. It's essentially identical. The major questions that I have is not like, where does it go? And that's the weird thing, because it's like the debate is, well, I can't run 300% in a few weeks. Well, all right. Every time it's run over 100%, it's been within a week. Like, it's never moved slow. So that's a bit of a strange thing to say, because if it's going to move, it moves fast. We've never seen like a really slow markup on AMC. It doesn't happen. Like even back here, this might be the slowest one right here. Even back here, this was like a month or something. That's still like a huge percentage. There's none of these are slow. This one's kind of slow. I guess you could say this is all one uptrend. That's kind of slow. But then it pushes like, I don't know, 60, 70% of the rest at the very end. Like none of these upward motions are particularly slow. This might be the best example of one right here that's kind of slow. But I'm like, where do you think it's going to go if it breaks this trend? It's not going to go back. I'll tell you one thing. It's not going to go back and retrade $4 to $5. It's just not going to do that. We don't do that. We don't go back and trade an area again that we've already traded quite religiously. When you go through these motions and actually look at where these trading zones are in each of these areas, they're not revisiting areas that they've already traded sideways in for a long time, because you don't need to. Like you've already exhausted the liquidity there. That's why you moved on. So anytime you see like a lot of chop on a chart, think about that as like, all right, we're hitting that. Now you might go back and test them again later, sure. But like every one of these areas where there's like a lot of chop, this is the whole reason that you're doing it in different areas is so you can get the broad liquidity. That's why by the end of this, the VRVP looks pretty full because you're trading all the different zones of the chart. You don't come from this area down bottom, right, and come back up and then trade sideways again, here forever, unless there's a liquidity problem. That's a big deal. Instead, you go from that to an SOS. And that's why on the Wyckoff charts, when it's time for a markup, you just go and mark up. Where is the markup value here, you might ask? Guys, it's not that it's not meant to be complicated. I don't know if you think it's really complex. It's basically like where we left that big gap at 527. So make no mistake, I don't care if you think it doesn't run now, but I guarantee you that when this is ready to mark up, it ain't going to go back and chill out again in the same region it's already traded for like 6 months plus. It's going to go from, if it's going to mark up, right? If it's going to mark up, it's going to go from the bottom of the range here back to the top and probably above it, because that's what happens in a markup. Go into an SOS, you might get a creek back up, and you're going to advance. Is that, and we lost the stream for just a second. The only possibility in my mind is that this either trades from, 750 down to 550, or it trades from 4 to 350, which is a really tight range. I don't think we need to spend a lot of time there because we've already spent some time there. We've spent virtually no time here in the last few years. We've basically spent almost no time at all between 7 and 5. So like, I get the snarkiness that some people might have about, well, it's not going to move that far. Never going to do that again. Look, I don't care if you think it's not going to happen now and you think it's going to happen 3 years from now. I don't know how that would happen, but it's going to go somewhere. It's come to the end of the rope here. Like, it's going to make a move. So it's either going to drop into oblivion and trade low, which is the biggest bearish case I could possibly make. Oh my gosh, that's so low, Booksy. Like a $1.50 range. That's all I could give you. Like, there's nothing else here. Why not just have it go to 0, man? I don't think it would, because this is the iteration. But I also don't think this is going to happen. So that's it. That's the only places you can see it going. And if it goes up, it's going to go to one of those two pockets. I can't find another. The only other place I could possibly think would be up here at like 15 to 12. That's astronomically high. That would be like a squeeze, or a squeeze likened to what we saw in January. So I'm like, this ain't rocket science, man. You've got a range down here, which goes from about maybe 380 down to 259. You're going to dump beneath that range if you want to spring and then pop up above it. But when you get above that zone and you get above that 380 area, where are you going to go? Are you just going to stop at 4? Well, that doesn't make a lot of sense, does it? Because as soon as you pass into the next zone, you're going to go up again. Like, it's not going to just sit in between the two. It's more than likely, if it has any kind of a strong buy-in, it's going to first push pretty high. Then if it needs to come back, it'll come back. And if we need to trade it again, we'll trade it again. So be it. You know what I mean? And that kind of goes back to the idea here with GameStop that, like, well, you've got to just kind of take it off and going. Don't you think it could, like, have some kind of a big pop and then drop back down? It's possible. It's not, and nothing in the market's impossible. Could you have something like this, Booksy, and then go in like the November or something like that? Yeah. I mean, you could. This kind of goes back to that second, in the very beginning when we talked about like the second example. If you had like a widening here that dropped first, this could be maybe what you see. But I don't think if this doesn't drop like hardcore, if this just kind of like has a nice little neat and clean, Because right now, I got to be honest, I don't see any real problem with this range. I mean, maybe I'm wrong, but this looks like the selling climax. This looks like a auto reaction with a phase B. This looks like a phase B bottom right here. So where do you need to go? Again, like maybe the pop goes up. If it doesn't go over the top, that could be like not as bearish. If it doesn't go over the top, it just pops a little bit into earnings and then drops. My guess is that it's probably just going to go down just below whatever this is, 21.97, that area. And then maybe below the selling climax, but you don't have to necessarily. So you could like have a little pop and drop that basically comes this way and then does it again, you know? Like that's possible. That could be your spring right there. That doesn't look like a spring. It looks really boring and uneventful. Like a little 5-day accumulation down there. There's nothing to it. Yeah, I know. That's exactly what they are. They're like super boring little sideways actions. You're just trying to grab some, I don't know why I'm being sassy. You're just trying to grab some liquidity before you leave. So I'm like, I don't know. I don't know where else this is possibly going to go. I talked about a few other things with GameStop. We've already gone way too long on that, so we'll not do it anymore. But I'll keep an eye on it this week. I'm really curious to see what happens going into the third. There was a marker there that was really interesting to me. So I'm very curious to see what happens. If it's back up to $30 on the third, which might seem a bit absurd. Absurd. But I have a feeling, and I'm not positive about this, I have a pretty strong feeling that the tech sell-off that we saw last week, I don't think it's going to continue in the same way. If it does keep kind of going, then I'll be a bit surprised. But I do think that there's a strong chance that that sell-off is like that profit taking that we've been thinking is going to happen. Getting ready for this FOMC, right? This idea that like it might be small caps time to move. And they are moving. You're getting people buying in. You're buying in as the rally's going, right? They don't want to be buying in at the top. So that's my theory. And I don't necessarily think the tech sell-off meant a whole lot. I was like trying to figure out why it was selling off so bad. There's always a reason, right? The news always tells you it's because of this. And you're like, yeah, maybe. I don't know. It seemed like a pretty gnarly sell-off end of last week. But we had a good month, so it's hard to complain. I'm getting a lot of requests from one person. Jason, you gotta chill, man. I am wrapping it up. I'm done, dude. You gotta chill, dude. You gotta relax. It's not a lecture series, but I did want to hit them. I do want to quickly mention this. So one of the big winners that could come out of all this is retail. And I'm saying could. So like right now, retail is getting slammed because of tariffs. And there's no real way to debate that if you're savvy in the market. You kind of are aware of that. Like they're all getting beaten the crap up, right? Walmart, Target, Nike, etc., etc. Because they have so much of their operations overseas. But very few of them are actually doing anything, which I think is really interesting. I was like researching about it this weekend. Very few of them are actually doing anything to like completely reduce their footprint in China. Instead, there's still, some of them are looking at like other places, but they don't know what's going to happen. And then this appellate court says that most of Trump's tariffs were illegal. I don't know, maybe because he's not the legislative branch of the government. I'm just going to throw that in there. But I was like, yeah, that kind of makes sense. Apparently, a lot of people think that it's backwards. They think it's some kind of politicized thing, but I'm like, listen, here's who that benefits. That benefits greatly retail if some of these tariffs that were announced do get revoked at some point or at least reduced. That could greatly benefit them because they were slammed pretty darn hard. And there was some pretty interesting statistics out there. I think the Barbie doll has gone up 42% in price. I mean, that's kind of crazy if you think about it. That's a lot. I don't want to get into other sectors right now because like a lot of sectors are getting slammed. Like farmers are getting slammed. Different kinds of farmers, not all exactly the same. I'm not talking about cattle farmers. I'm talking about just like your wheat and corn types. There's different benefits, I suppose, is what I'm trying to say, to different sectors. I've been thinking about retail, and I was researching, and I was like, yeah, they got pretty darn pummeled, and almost universally, none of them are eating the tariffs. Like some of your big box retailers, like Walmart's, they can kind of eat some of them. Their profit margin is not that huge, actually, but they can eat some of them. But almost all the smaller, more mom and pop style retailers are, they're just stuck. Like they can't go anywhere. They're either going to run out of business and they're going to lose their business. They just are. Like they have no choice. Like you have to imagine, like if I'm selling a product and I import LEDs from China or something like that, nobody makes them here. Like nobody makes them in the quantities that I need. You can't just flip over and say, all right, I'm going to buy from an American seller that doesn't even exist. So you're just cutting them off at the knees. You're basically saying, well, you're just going to have to pay like triple for this part that you use in your product. So there's a problem there when you're a smaller business. But I think your big box retailers have been able to kind of avoid some of that. Anyways, I'm curious to see what happens in the next few months. I think there's going to be a lot of sensitivity in the market when it comes to news about these things. So let me find a good panel. What you doing with Roblox, Booksy? I made a lot of money on Roblox, specifically on this trade right here. No, it wasn't. Which one was it? Was it that trade? Yeah, this Monday trade right here was a 300% trade. It's crazy. But it is a big move. So, I mean, in the grand scheme of things. And this ultimately did come back to where I kind of thought it would, which is sort of nice. Anyways, I'm done talking about Roblox. But I feel like so there was like this huge tech sell-off last week, and I was watching, and almost all the stocks that I've been following lately were kind of techie stocks. So it was very red week at the end. It wasn't red all week. It was the last few days mostly. Even Apple, which had been doing quite well, saw a little bit of that. I don't think Apple needed to see that much because it had already sold off prior to that like tech sell-off. So I was like, Apple's okay. That's one I think is worth looking at. Tesla really dumped, like hardcore. But I also felt like Tesla could come back to 330. And I said that previously when we were up top. I was like, Tesla might come back to 330. And then it's come back down to 330. I was like, kind of wish that I hadn't seen that. Nvidia also dumped. But it's weird because tech has it's doing that thing where it's like you're kind of getting this widening top. It reminded me of the disbursement idea of like, well, I mean, you could break down. It looks kind of like it's about to start something bearish. But then I'm looking at these indicators. I'm like, man, I don't know, man. Like everything kind of looks like it's basically on a bottom. Like the sell-off was really just there to potentially to just shake some people out. And I'm curious if, I mean, it could make, obviously, anything could happen in the market. But one of the things I like look at a lot is the shallow S-curve idea. And I was like, man, this reminds me a lot of that kind of a sell-off. Like it's refusing to make a higher low here. And all it would have to do is this. and it's bullish. Like it's such a quick move. But all that has to happen right here. You know, it has to push above like this marker right here, like a penny or something, and then it can come back down. If it lands on that creek and holds it, it's gonna rally. And the crazy thing about it is like, again, it's sort of like this perfect example of what looks like a bit of an LSPY. Like it's possible it drops and it has a nasty drop, right? I can't say it won't, but it's certainly a possibility. But it's sort of just sitting at this indifferent moment of like, all right, well, if it drops, you know, maybe it drops back down to like 170, you know, near this bottom. But if it rallies, you're talking about a pretty significant move, because in order for this to kind of have any continuity to it, it has to go back up and like fill this gap. And that's a big move. Like it's a huge move percentage wise intraday if it moves during the day. And in addition to that, if it has that breakout, then you're looking at 200 easy. It's going to be like 205 for something like NVIDIA. So there's a huge potential there. It's a risky play. There's certainly some downside potential, maybe the first day of the week. But we'll see. I'm curious. I don't know, man. To me, it looks like it's ready to bounce. And I feel like, yeah, you could be in something like a hook situation like this guy back here where it just dumps one more time and then bounces out. That's possible. That would just be like a way of delaying it, like a bottom. But on the whole, I'm like, yeah, it looks pretty good. So let's see what this is. BLMS, Harrison Global Holdings. Yeah, you missed that whole thing. I think I went through AMC already. I went through AMC and GME for like an hour. It does not look awful. It looks great. I gotta put it as bluntly as I can. It looks wonderful. It looks exactly like what you want to see at the end of an accumulation. You do not want to see it going ballistic and then dumping off the face of the earth. You want to see it like chill out, exhaust the range, do a nice subtle kind of a drop after some sell off, so on and so forth. So okay, yeah, this one's got some teeth to it. It's made some pretty huge moves in the past. I'm gonna just range it out with like basic range stuff here. I'm gonna guess that that's right. I think that's about it, right? Sort of like a 50-50 range here. And then it looks like this goes back to the beginning. Yeah, right there. And then there's another cross. Yeah, I don't know why people think AMC looks bad to me. It looks like it's on the verge of a huge move. And yeah, like you could say like, man, I think that move's going to be bearish versus it being bullish. I guess you could say that. But I'm like of the opinion that it's going to move pretty significantly in the next month. So I'm not really sure where the drag's coming from. 1, 2, 3, 4. It's a pretty classic 4 top. I tried my best to just sort of eyeball it out the gate, but it doesn't look particularly great. Yeah, this was a... This is not a good one. I'm not a big fan of this. And I'll tell you why. Because it's not giving good indication of breakouts before the close. This is a very, very short warning right here. Like extremely short. So this is going to demand a lot more attention than you probably want to give it. So the fact that this closed above here, it didn't even close above like the 15-minute EMA. It didn't close above the big creek. It just closed like slightly above. So like how are you going to trade it, you know? You'd have to sort of just pick your boundaries and say, well, I'm just going to buy on lows, maybe when the RSI is dipping down, and sell on highs. But like there's no warning here. And then the whole entire move is in extended hours. The rest of it's just selling. And the same thing happened back here. There's like a small candle that might be like 3 minutes or something. So I mean, these are really huge moves, but they're not in regular trading hours, and they're not giving you a lot. This is the same thing right here. Just a barely kind of closing high, and then it just goes. So how are you going to do, how are you going to know, you know? This is the same way. This one didn't even have a warning. I mean, I don't know. The way I drew the creek, it was like would be like that, just something simple. How would you know, you know? Maybe the EMAs, maybe the I don't know, it could be maybe a VWAP or something. Not really sure. Or a Bollinger Band. You could possibly use the RSI. It looks like anytime it kind of like built out above it and closed, it had a big pop. And this is just a 15 minutes, so I mean you could look at it in different time frames, I guess. See if there's one that fits it better. So right now it's not a buy. I mean, this to me looks like a cross down. I can't really tell based on this where the middle is, but usually there's 1, 2, 3, 4. I do think that typically this formation breaks out like twice. So there would have been like a narrowing, yeah. And then this is I think this is like a failure. This looks like a UTAD situation right now. You see how it failed twice to come back above, and then it hooked each time to come back above 20 cents. So it pushes up, hits 20 cents, rejects, pushes up, hits 20 cents, rejects. Now it hasn't made a significantly lower low, but right here it's like kind of building down. So if you were going to swing trade something like this, what you probably want to do is wait for, and it's going to be risky as all get out, but you probably want to do is wait for that RSI drop. Find a good RSI that works or something like that. You know, find an indicator that looks like it's going to play in pretty well. I honestly feel like it's kind of a flip the coin for some of these guys because I don't know what their business model is, and so you're just like guessing. But this to me doesn't look too hot. I could try one more thing. I'll like look at the hourly. It's the same deal. This is closing beneath there. This changed a little bit on the hourly, but it's the same marker. I think this would have been different had this could have been different had Well, it says it reconnected, so couldn't tell you why that happened. I think it would have been different if it had closed up here around 19 and this had been above. But there's nothing I can do right now. Like, it doesn't have any markings that makes it look like it's going to be super bullish. To me, it just looks like it's trying to distribute off of 20 cents and knock it back down. Now, previously, it did do something similar right here. But, you know, like, so you might be looking at that saying, well, isn't that the same thing? Why not, you know, why not do the same thing here? Again, I can't really say, like, based on this chart, it's not a very good chart. can't really say that it's breaking out unless it comes above like 21. More than likely, if it does that, it's going to do it in extended trading hours, and you're not going to know. So it's like you're just kind of gambling with it. But right now, I'm like, yeah, it just looks like a normal M, and I could see this just kind of trying to go lower. There's no reason unless it jumps back above here. So, and if it does that, it's probably going to do it when you don't expect it. So, middle of the night. Starts going down again. I think the goal here is to try to get back to this 10-cent range. Now, if it goes down to the 10-cent range, I think there's a decent chance it has a pretty big rally. So you could put an alert down here and trade it if it drops low. Try it out. Yeah, the RSI almost looks like a... It's very strange. There may be something else at play here with yeah, I bet it's this creek. I bet it is doing a creek jump, so that's a good thing. That's what it looks like. Right there. So this, yeah, this could be a really huge run. Like if it comes, it's got to do something, you know? If it builds up above and it manages to do something, like I would have to come way up here to do it. That's possible. But I think what would be most likely would be to come back down and check the bottom again. And it doesn't look like this made a higher high, so yeah, I don't know. I can't say that's bullish. It's not. That's a bearish push up right there. At least for now. It didn't make a higher push after it hit the low. So it hasn't actually changed direction yet. It's just making lower lows and lower highs. So yeah, this is not one that I could really recommend. I definitely could say that it's probable that if this does drop down to 10 cent, it's pretty likely this could come back up decently far. I would suggest it goes back to like 18, and if it managed to hold there, it could go up to like 25, something like that. This probably forms like another ear. So like a repeat of sorts of this move, I think would make sense. But lower, like down here. Yeah. It's just the same thing. It has, there's just no way to confirm that yet. You know, it's interesting because someone had mentioned Weeble, and I looked at Weeble's chart, and I thought that at first I thought Weeble looked really good. Then I just kept staring at it, and I was like, yeah, it's definitely a possibility that there's a bigger retrace that might happen. But it's a really bullish chart if you get that retracement and then other things happen. So it's like one of those situations where I'm kind of staring at this like, yeah, it's not ideal. It's kind of right now it's sitting on what could be support. But you know that if it drops, it's going to drop like a rock. Like it's going to be going real low probably. So it's a tough one. I think Well, let me look at it this way. Let me look at it like it could be a reaccumulation. Is that possible? It looks like a double top at 24. I don't know what happened here. This is not time yet, you know. All I see is like it wicked above right here on the 28th, and then it closed below. And then it's been dropping, and it would make sense now that it's going to go test the bottom. That's usually what happens. I'm thinking that's going to be pretty soon, like either now or like within a few pennies. And if the bottom doesn't hold out, then it has to make a decision immediately. So typically when you get these compressions, if you go up and then down through the bottom, I usually think that's a little more bearish. I don't like going up first, because a lot of times that means you're distributing. And it did come back up double top right there, like 20. So it looks like it would just be ready to go down, probably to retest these lows down here at 15. But this is like the moment, like remember when AMC broke out in May? So there's a similar action that can happen if it's bullish, because it could be going into a spring. You just have to identify like where that low is. I think in this case, I don't think it has to go that low, but in this case, I'd be looking back at like 17 cents, like the second bottom here. There. So if it were to drop low here and then build back out, that's super bullish. So it goes high, it's checking liquidity, it pushed resistance. If it drops down low and then reaccumulates and then breaks again, then you're in a good shape. You should have a pretty significant run up. I would venture this trend maybe. It's kind of an odd one because there's not really like anything going on before this except for the drop. But yeah, I would venture that's a possibility that it goes all the way back up, retest the top. But it's the equivalent, if you want to look at it as just making a high and then lower, like a higher low. So that's just an easy way to think about it. So yeah, this could have a pretty big move to like 30 cents. Go back up and retest that level. But I think that's if it goes slower, it'd be over here, like after this mark. And that'd take a while. So I'm making it look like it just goes low and then jumps right back up. But reality is that you do have an earnings report, and that's probably going to be the best catalyst. If there's something else there, then I don't know what it is. That's a silly question to ask. Why would you ask that question? I have no idea. I don't know what the companies are really about, you know. From a technical standpoint, they look almost exactly the same. They both have what appears to me to be some kind of a carrier function going on, where you're basically just consolidating. You haven't yet made a decision yet. If I had to pick one, it would be the one we're looking at right now. But the reason for that is very simple, which is that if I had to pick one, I don't know, it probably came too high, and that's the only thing I can say is like they both look kind of distributive. I would have been a little bit happier if this one had pushed up, but it hadn't gone as high as it did. It only went to like 26 cents. Because then it would have been like, yeah, it's pushing for sure higher, but it's not trying to like go above into the next range. This came really far. But if I had to pick one, it'd be this one. But you're basically asking me to pick between two charts that could be distributive. So that's kind of, I feel like that's silly. That's not really a reasonable request. The only reason I'd say that again is because this obviously did push and made a decent high. The one we looked at just previous did not. It went up, down, up again, and it made a lower high. So it has a little bit more to prove. This one, at least to me, looks like it's trying to potentially change direction. And I could see it maybe running up to retest this moving average at some point. But I mean, look back at the history of this chart. This is the same thing that happened here. It dropped low. It made a new high, but then it failed to hold anything. Came down low again, made a new low, then just distributes. It's an order of operations, you know? Yeah, that pretty much looks the same. So, I mean, you could easily make an argument that it's just going to do this, and there might be a pop back up at the top. The more reasonable way to look at it would be, again, like I just said, like maybe it comes back up to here again, 30 cents. But I don't think you could say it's going to go beyond that. So that's me. Yeah, you know, you check out the 4-hour on NVIDIA. It certainly looks like there could be more downside. MACD doesn't look great. Kind of so-so. It's a weird place to kind of see a bounce too. But then again, it also to me looks like a creek retest. It's the same as the short term. Well, I guess we'll find out. Unfortunately, if something like NVIDIA does drop, it's going to be pretty bad. I think it'd be kind of nasty. Apple looking pretty good. It's a messy chart. I like Apple for another push. I still don't think it's come up as high as it should. And I genuinely do think that 247 is still possible. Right now I'm just looking at this current gap zone up to 240. There was a high probability zone here. If it backs up and goes again, it should be able to go. So I'm in Apple right now. I don't know how long I'm going to stay. That looks kind of bearish, that close. And both MACD and hourly on the RSI and MACD, they don't look good, but we'll see. Yeah, it looks like distributive on the 15-minute. This one didn't actually cross up. I'm not sure. No, same deal. So there was kind of like a hard rejection right at close. So it doesn't look particularly great opening this week for Apple, unfortunately. It looks like almost your indicators close kind of bearish. That's not great. And then I think in addition to that, yeah, it lost its uptrend, which I knew it had done that, but I thought that I was kind of counting on that because normally what we see again is that S curve. So I'm really looking for that middle point. And if you get the S curve, you should be able to get the continuation. So I wasn't exactly like surprised to see it drop through it. And really, that started on Friday. The early part of the day, I think on Friday, it dropped down. And so there was a trend going from the bottom up here. And that's what dipped right there early Friday. And I marked it off because I was like, well, I guess it could come down low and like flag here. But I had thought that was going to happen anyways, because normally during these kind of moves, you do dip the first trend. It's pretty rare that you keep that very first trend the whole time. I mean, it does happen sometimes, but like anywhere you go back and you look at like the first two bottoms you make, you almost always like dip out of it by the third or fourth bottom. And then even here, it's like, yeah, I walked across, but then it kept going. So there was more like an arc. So it didn't really shock me that didn't hold. But I have to say, you know, those are difficult situations because in the case of a distribution, if this were more of a macro distribution, you would push up and you'd see something like this, but it wouldn't cross up. It would be like an M, just like you see, but then it wouldn't cross up. And I've got the middle right there going upward, starting August 8th through the hook that happened here. So it's tricky. It certainly seems like the market wants a little more red, perhaps, for some of these tickers. But yeah, I had the 50% marker on here. And I was thinking that it may go up to like 239, hit that gap. Based on these two trajectories that we currently see, that seems likely. It looks like 240, but it would be in view for like Thursday. And that's a big if. That might make sense as to the breakdown and the time then spent, I guess, putzing around. Maybe even Friday. That's high though. That's like way up here. That almost makes more sense because that's the top of that channel mark here. It's like one or the other. It's either going to be like just below it or just above it. But then my S curve would be wrong. Very wrong. Well, I mean, it's wrong if it's not, if that's where it terminates. But I didn't include the bottom, so that actually does go over to Thursday, Friday. Okay. This to me looks wider though. It looks like it's going to take till Friday. If it goes. I get nervous about these kind of triangulations because to me it's like it doesn't mean a whole lot on a short term. It just kind of is telling me, yeah, there's a chance, you know, it comes back up there. But it has to be bullish, right? So you can't get to a top and then do a distribution and expect it's going to just magically go there. That's not how liquidity works. You have to have the follow through. So the proper motions still need to take place. But as for right now, it just looks like it's kind of crapped out and it looks like it's going to try to take it back down. I'd be interested to see if it can hold around 230, 230.50. And I don't know what's going to happen pre-market. Who knows? If it holds there, I think we may be in good shape. And then you can just look at retracements from that point forward. I've made a lot more money on just simple retracement plays than most things. So I'm just looking at these two EMAs. So we definitely want blue on top. Right now blue's on bottom, which is the 180 EMA. And that's a 200 SMA. Blue on bottom tends to be a bit more bearish. It also tends to happen when it's topping. You can see like blue is flipping here, here, here. So and then let's see what this wavelength is right here. So this is interesting because Apple's had a really consistent wave, which I think is kind of fascinating. So it's a pretty consistent wave motion. Like the ups and downs have been fairly on point, you know, not perfect, but pretty darn close. So this middle tends to be like a depression point, and then it goes back up again. And if you divide it into 4 sections, you'd see that the peaks are almost perfectly like on the quarters. Not always. This one's almost reversed. Here is like a U shape, but this one's pretty close. So similar here, you have a push in the middle right there. It's basically like a peak. Then you've got a valley right where the valley is supposed to be, right here. And you should be seeing a peak again going into really this week, right around the same time period. It doesn't have to be that perfect though. So, I mean, you could definitely make it, I guess you could make an argument like, well, it's already there. Maybe. I don't think it's going to be that crappy though. Still. So on average, yeah, this should be about Wednesday. So we may have like a red day tomorrow and then like a turnaround on Wednesday. That's pretty big. I'm kind of curious now if the rest of tech looks like that. It seems to suggest, and then that S-curve is also confirming that, because most of those targets were here between Wednesday and Thursday on Apple. But not Tuesday. Not tomorrow. Yeah, Apple's been pretty consistent with its wave structure. Tesla's actually been pretty consistent as well, although I think it's really reading a lot like this did, and I was mentioning this on the Discord group, but there's a very, very, very similar pattern right here that built out. What's curious is how low this went. It almost like, so it's like skip this kind of back up again, which would be like the middle, right? If you're looking at it as like an S-curve, this would be like the middle of that S-curve. And it almost like skipped it, unless this is just like hyper compressed. It's trying to get down to that 618. So they're going to just dump it like first thing Tuesday or something, open at like 329 and then just go up. Because if you look at it from that point of view, it's like, yeah, that would work. You could get probably get some pretty serious traction out of something like that if you dropped low really early in the week and just dumped this way, and then essentially just that's when you jump your creek in reverse. But I had went through the process of driving out the parallels here and trying to like figure out all that jazz, and the way it's been hitting has been fairly consistent as it goes down the pattern. So each one of these has like a sell down, right? Each one of these walks down a certain way, so on and so forth. The way it's navigating them is actually quite, I don't know what the right word is. I don't know. It's just really well patterned. So like every time it comes down, there's like this hook motion and a drop off this guy that I've got on the chart. This is a parallel that's been running through really all the levels. So like this is also running through here, and you can see as a support. It's a little looser than I would like. I wish these kinds of things were a little stronger. The good news is though, is that the next parallel structure up, if you kind of go backwards and look at where these are, they go back to this like first buy-in area when it was pushing up to new highs. And Tesla's a weird one because it's got some pretty serious swings, and it can have some very, 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 very heavy downward swings. Which is right now, I'm like, yeah, that distance from 350 all the way down to like 325 is totally game. I mean, you could easily get there based on the way this is set up. These swings have all been pretty huge. But what really gets me kind of interested, I guess is the right word, in Tesla, this makes me nervous because it looks like kind of like a U shape. But it hasn't even come back up to the 360 mark. And I'm like, if it's going to distribute, it's going to pump to that 360 mark. So I still think there's a bullish setup here to likely go to like 360s. I'm not positive it's going to make the rest of the move just yet. I could definitely see it dropping really, really, really low, back to like 200 or something, or even maybe more like 300, probably more likely. I don't know why I said 200. I meant 270, but down to like 300 again. But what really gets me on this one is that previously, when Tesla ran up from this kind of multi-year trend back here, it broke out at like 245. The middle was right where we are right now, and then there was a huge extension back up. And we're trading that middle zone again, but at length. So there is a possibility that at some point in the future, a very good chance even, that at some point in the future, we're going to meet that top again. And if we do, it'll probably be along a pretty significant stretch to the upside, just like we did here. So there's going to be like another move like this is what I'm trying to say. Another one of these massive pushes that happened like in April. I'm just not sure exactly where it's going to end up, because I see it as like a sort of a copy paste, and you're probably going to again have some continuity there, some things that are pretty different. Should be a little off. There we go, like that, because that's your range in the middle. So that would be pretty close to what we were saying here. So at some point there's going to be like a big move, but I was looking back and that level is like 325, which is right there. So they've set up they've set this up so that it jumped the big picture creek. This is a huge downtrend right here. This was the resistance. It hit 3 times, then it jumped it, pushed above. So it's jumped over. It's over top of it. I get that this looks like a 1, 2, 3, 4. There's a possibility again that this has like some kind of up thrust and then dives. I don't want to think that it's not possible. That'd be silly. But based on where this is, and you look at this retracement as like, oh, it could come back down to 325. Like that's a 618. And you go back to the big picture. It's like, yeah, that's really right where this thing took off from. Way back here. So I'm curious to see if maybe, I don't know, the reason that we're doing this drop right now is just to get down to that level so that it can actually rally. And it needs to have like a decent drop. The only other marker that's there is 300, which is what I was saying before. So for whatever reason, it did go up and then it dropped down. I could see the 300 marker here going into mid-September. That could be like a rate cut kind of thing. Possibly. There should be a huge rally though after that. I can't imagine why it wouldn't. Because if it holds up at 325 or 300, the next action should be like all the way back to, which seems kind of crazy because I'm like, I don't know, man, that's pretty far. But then again, it's like this thing went sideways for a long time. Like, been going side. We still haven't even touched the top yet, you know? So it may seem a little bit out there, but I'm like, no, it kind of makes sense. This may go down to like 300. 320, and then it should push out again. You should get a big push. So I wouldn't sleep on this one. That's a big move. And Tesla has some pretty crazy option chain activity. It's a high amount of volume. So this week, I'm not sure what to expect. If we get a bad first day of the week and we get a really strong second, third day, I think this is what's going to happen. I think we're going to see it like potentially drop low here, but then rally all the way back up. And then if it sells off again, unfortunately, I'm thinking that it's probably going to drop down pretty low. We may see the 320s after all. I think we might see a full retracement back to where this thing started here. And that would at first look bad, but I don't actually think it's bad. I think that's where it finally kind of like takes off. Yeah, and it may take a little bit of time. This looks like Friday, yeah, Monday. So if you're in Tesla, I can't tell you what to do with your money, but I know that for me, if I see it pop again, and we jump this creek here, whether it's tomorrow or it's like Wednesday, which seems more likely, I had this up going into Wednesday. When it gets near 350 again, I'm probably going to get out and stay out. Maybe take a bearish position, because I suspect that on like the 4 hour and maybe like a higher time frame that the RSI needs to come way down. But I suspect this is going to do like an 854 retracement right now and go ahead and get as low as it can get going into Monday the 8th. I'm not positive it's going to just take off after that, because I do think it's possible that this could like crap out and go even lower, but that's what I think is going to happen. I think it's pretty likely. And if it does go lower, it's probably going to go to like 308. Again, that might look bad on like a first glance. You're like, ugh, nasty, Booksy. You think it's going to go down like way down there? But it's actually fine, because this is an M cross, and as long as that M cross stays above the jump and it makes a higher low, really what this becomes is like a spring action here. Like, and we've seen this happen before on some tickers. That right there is all you need, and then it's going to be like a rocket ship if that happens that way and it can hold on to those levels. So if we happen to see like a sell-off in tech stocks continue until the FOMC date, we'll probably see that rally on small caps go. I think it might be, again, that rotation of positions. That would make sense to me. So, yeah, that's what I would suspect. It's a bit of a theory, but I think it's a good one. Yeah, I'm going to play really light on my feet on this guy. I don't want to stay in it too long. I'll be happy if I can get out of that one, because I got in it, but I got in it thinking it was going to stop at 3. And I don't know why I did this. You should not try to catch a falling knife. But I had a really strong feeling it was going to catch between 335 and really this 0.5 retrace here at 334 for other reasons. But it didn't actually catch there. So I was like, well, yeah, maybe. I mean, this could hold, I guess. It's possible. Or it could just slightly drop. I don't know. It's already like right there, I guess is all there is to it. This looks really good, actually. The way I did this, I'm like, yeah, it looks really nice. That would be like a weakness. Maybe this will pop. Who knows? Apple and Tesla have been kind of running opposite at times. So if Apple dumps, doesn't mean Tesla has to dump. You might see Tesla just go. But I think by Wednesday, this is going to like crap out. Originally, I had looked at this as an S-curve. And the S-curve, if it had continued, again, with the M-top, it needed to continue here. It did not. It was going to pump up to like 370. There's a good chance that that's where it was going to go. So originally, I was looking at that. But I think longer term, we may still see that come to a head in October. It would make sense to me that maybe in October this kind of chills out a little. And that could be like this period right here, right? So even though this is a really extreme move, there's still sections to it. There's a one big move, and then it goes sideways for quite a while. And that would make sense to have that happen in like October going into November, perhaps. Sort of like an SOS with a backup, backing up to 365. So like pump pretty far, maybe go to near 400, and then back up to like 360. That's assuming that it goes and it doesn't just die here. If this went back down beneath the creek, I don't know. I couldn't obviously recommend it, but that could be a couple weeks out. So we're talking about mid-September for a bigger rally potentially. But yeah, I mean, it adds up. It makes sense. And then these parallels that are in the middle, they tend to run anyways pretty well, concisely with a, who knows, maybe this doesn't even go that far at first. It just goes up to like 360 and then makes the SOS here instead. Could just be a push over the top within the backup. And October is kind of not as exciting as it could be. I don't know. Tesla has this ability to run pretty hard in weird times of the year. Because I went back and looked. I was like, well, there's this tradition in the market that says that these are bad times. And they're not always good. Like back here, September, this has a pretty big rally in September, but then it kind of bleeds in October, rallies again in November. But then, I don't know, I kept going back and looking at stuff, and some of these guys are pretty backwards. This one's clearly not that great. September, October. But it's like, I don't really think it matters that much. Tesla might be pretty consistent with that idea, though. It looks like September, October is like downturning a lot. So maybe this is like a rough period. I don't know. I guess there's also the chance that this just turns into a giant trend, but I didn't really want to deal with that. That would be like a really bad October, just to go back down to like 300 and just kind of chill out down here like all of October. It could be like a widening on this side. Well, we're not there yet. We'll see what happens if it comes down again. I actually had looked at Wolf Speed as a possible good trade, but I don't know, it's kind of betraying me. There's really good reason why Wolf might be in a good spot, and there's also really good reason why you should stay away from this, because Wolf is one of these tickers that has a little bit of that kind of a meme vibe to it, meme stock vibe to it. And MPW trying something over here too. It's trying to go here. It held above that. Sorry, I just noticed that had moved. Mostly shares in that, shares only in that position, so I haven't really been paying attention to it. Could be a parallel. Yeah, I have it going up to like 480 and then possibly dropping. Anyways, so I've been looking at Wolf Speed because it has a like this backed up and it went pretty far, and it doesn't look particularly good right now. It looks like it kind of dipped out and just kind of left this behind, but it avoided a certain cross that I find very curious. I'm not going to keep chasing it to the ends of the earth. I do think if it drops down to like 70 cents, obviously it's done. But the for now, that would be kind of the low, and I do think that's the most likely place it drops to, and if it's going to have any kind of a big drop with a rebound. But right where it's at right now is a support, and it has had historical support there a long time ago. Um, buck 20 evaluation. And then what was most curious was like how ridiculously oversold it was. And you can see like it looks like it might be gearing up. It got just above there on the hourly. I don't think it jumped the RSI creeks, so to speak. It jumped the recent one here. So you can see that. Definitely over that. Definitely over the moving average. So this one might just go. This is only $1.24 buy-in. So it might just go. But then it has to do like kind of the next leap here. And then it should be free. But I was looking at this and I thought if it does go, where's it going to go? It's probably going to head back up towards $1.40. At first, that seems inconsequential, but then when you zoom out and you look at the bigger picture, it's like, if it held above $1.40, which is a big if, it'd be above a much larger creek and more likely to go up to $1.50. And then that leads to basically like a really nice wraparound. So essentially you have like a symmetrical move. And I know I'm saying if then statements, but it's not as complicated as maybe I make it seem. It's kind of just a wave, right? So this would be like a halfway point, and that makes sense. So then I'm looking at it as if it's just a wave analysis. And it has already jumped over this creek for sure. It's backing up. So that's already happened. So this is a pretty huge move because if you look at percentages, that's actually like almost 40%. Like it's a really big move. 30% for conservative kind of mindset. And this previously has run from 120 up to 160 multiple times, in fact. So while I don't necessarily think this thing is going to moonshot right this second, that's not really what I'm looking at here. I'm just looking at simple, like good setups with good trajectory output kind of thing, like decent chance that this is going to hit. And I think there's a decent possibility that this has a move up to $1.60. And then I'd have to sort of wait and see. I think that could ultimately just reject like it did up here. And this would be like a falling cat ear. And then it's going to dump down to 70 cents if it does that. So if it rejects at 150, it's probably going to come all the way back down here. Again, bigger move could then ensue, but that's later on. So I'm kind of curious. I think Friday's price action was a bit odd. It didn't quite do what I thought it should do, meaning I was looking for that like auto reaction or the phase B top. It didn't give me exactly what I wanted, but it is a possible either an M1 where you're going to have a second one here, in which case this is kind of slow. It could be like this. And then you still have the chance of like having a kind of a spring motion before a pop and or, whatever. But the other thing is like the level at 131. So I think there's just really simple ways of looking at a trade like this. If it pops above 131, it's probably in good shape and it holds above 127. So this little zone right here, I don't know if I'd question it too much at that point. Yeah, I think it's possible that's all it's going to take, and then it's just going to go. It's a double whammy of iterative motion. There's one here, and there's one here, and it's basically the exact same iteration. So if it's trying to do it again and it fails to go low, then that's where the buy-in is. If it continues to iterate and it continues to be able to push low, then this will go parabolic and that will be very bearish. That's how it could go down to here without, and it'd have to do it, I don't know, over a little bit more time. We couldn't do it like this week. It doesn't seem likely to me, but you see that, like, this M cross up and then back down again. And then this is like a phase B bottom. And then this M cross up would be like the reaction up. And then again, you're going down. This is making a low here, but it's also now below the bottom here. So I'm like, So this is like a 1-2. It just kind of I guess it's like a domino. It should just go up and be a pretty huge move. It will seem like it comes out of nowhere, but it'll just have like a massive move. Potentially. That seems like it comes out of nowhere. I'm only going to suggest 160. In reality, it could be pretty far. Like, it could be like this first move and go all the way up to like $2. But yeah, I don't want to suggest that it's definitely going to happen. Anyways, that was another one I was watching. There was a couple others I wanted to look at, but it's gotten really late. So I'm probably going to chill and go to bed. I need to go to bed by like midnight. Otherwise, I'm going to be exhausted. I'll be back in the morning on the Discord. I'm probably not going to stream tomorrow. It's unlikely. We'll see how the day goes. I've been doing pretty well with the challenge. I got over my goals this week. I aimed for 100% gains. I got 150% gains. So that's pretty good. I can't say with with certainty I'm going to be able to hit that goal every week. I was thinking about it a lot, and it's putting a lot of pressure on me too, because I'm putting a lot of pressure on myself to try to do it. But the whole point was to develop, really the whole idea of it was really to develop a system that works. And if you don't use that system because you're trying to get this goal, I think that's a bad thing. If you use the system and you just didn't meet the goal, that's still a good thing, because your system is really what matters. As long as your system is like bringing about good results. So the system I'm using right now is fine. Like, it's not, so far it has not betrayed me. But we've also had a very bullish market. So some of this is going to be in the last month. So some of this is going to be tested, I think, this week. If the market's south and the market stays south, is it just like moving that to a different set of tickers, or is it, trading something like a put, or what is it? Is it going to work? So there's a lot of big questions that'll come up this week that have not yet come up. But yes, thus far it's worked. I also have this, I don't want to jinx it, but I have this kind of bad feeling about it, because every single time I've had these kind of massive pushes with my portfolio because I'm day trading, something happens and it kind of slides the other way. And then it sort of turns into this like snowball effect. And I know that a lot of that's just psychological, but I think some of it is, again, like if your trading system in place is not efficient and effective, and you're not using the rules that you set up, you could end up in a really bad situation, like really fast. So it's important to keep testing it and make sure that it doesn't have to be foolproof, but just make sure that you're using common sense and you're not over leveraging and all this other jazz. Because yeah, I mean, I'm doing really well right now, like, but I feel that sense of like, is the other shoe gonna drop at some point, and just, I don't know. There's also like a threshold. Like, I always get to a certain point, and then that threshold seems to stop me. The big difference this time is I'm trying to trade proportional amounts. Make sure that I'm really careful to not overdo it in any one trade. This is target, by the way. I can't decide. this this end of the day on target, it was really all within the last like 15 minutes or something. This end of the day just didn't fit well with the rest of the day. I thought this looked really good. To me, it looks like a huge compression. You can see like that compression down here. So I'm not complaining that it broke out, but the way it broke out, I don't know. It just looks ugly. It just kind of has this really nasty sort of smackdown at like 96 here. It held up. I could certainly see him like rug pulling it though. So it's just making me nervous. Otherwise, it was pretty much perfect. The next motion should be a wave up to the next creek, which is like way up here at 97. And I've got it a little over to the side, but it should be like 97 right there. I was just mapping out where I think that is. And then the question is, can it break out or does it need to go sideways? But like a lot of these on the big picture, it's kind of at a place where I think it looks pretty good. I'm a little nervous that there's a head and shoulder at play. Clearly, that would make me a little nervous. If it is a head and shoulder, then it's probably going to iterate like one more motion up and then it'll drop. And it'll look like this one, but it'll do it on like a bigger scale. So all that means is that it slides below here, probably hits like 94, and then it kind of goes in here and then jumps again later. And that would just be like almost the same exact thing we just saw, but with a bigger iteration at play. So if that happens, it would look like this. But I honestly don't think that looks bad either way because of where it is on the big picture. I think that could be quite nice. And the big thing is I want to see it hit like 95.85 and just hold on. So on the one hand, it could already be out and ready to go. Technically, it could be like an auto reaction, phase B top, phase B bottom. This could be a spring. I mean, it made a new low here. So if it holds above 95.83, it's fine. But if it dumps 95.83, I think you have to think about this as like a larger picture. And we may need to see that reaction. It probably would be 95.69 instead. Like right there. And I don't know. I have no idea when that might take place, timing wise. There might be a way to find out, but maybe red first day and then Wednesday start getting a little more green, build out into Thursday, Friday. This was a Friday move right here. So it certainly has a possible run up on a Friday. It's not impossible. That's a huge move on a Friday. Of course, it lost like half of it the same day, but that'd be like going all the way up to 102 or something. I could see something like that happening on Friday. There's a lot of what ifs on this one, but it is in a good place overall. I'm not really seeing a huge amount of issues. The biggest concern, I suppose, is kind of a rug pull right here. But I'm cautiously optimistic that it won't just drop to new lows. I don't know, I just am. You guys are like, that's not helpful. Well, it has to do with like where this is on the big picture and where this has gone and what maybe we should see. I don't know. It did react pretty far, but there's like massive gap zones